So hello to you all, and thank you everyone for joining me on screen and for joining us this morning. It's great to have so many different perspectives on this panel session today, and I'm really looking forward to getting into the debate. We've done some introductions already, so I will just dive straight into the first question. So almost a year ago to the day, on the 13th of May 2020, we saw the house building market open back up after the pandemic closed down. So how has the sector recovered since the pandemic, and what has your business experienced in the last 12 months? Kelly, let me come to you first on that one.
I think we didn't expect the crazy market that we actually ended up being in. We went home collectively at the end of March and kind of had visions of quite bleak times. We had a dark day where things got really quite bad, but certainly speaking from a shared ownership point of view, things just went up and up and up and up and up, and we're in a position now where our business is easily 40% above where it was pre-COVID. So, you know, nobody's grateful for COVID, but from a market point of view, it's been incredible to see that consistent desire from purchasers to get on the housing ladder, and the support of lenders, whilst understandable that lenders had to retract when they did, the support of lenders coming back in has been really encouraging. Still not quite there, but you know, it's a really good place to be, and it's really encouraging to see going forward that this kind of sustained these sustained business levels and inquiry levels are there.
Absolutely. I think COVID has forced us to look at our own businesses in a very different way, and change a lot of things. And it's really great to hear that that's been a positive result, I suppose, for you. Adrian, as builder of the group, what have you seen happen in the building market since it closed this time last year?
I think to Kelly's point, it's important to remember, you know, what March and April looked like. So we have about 6,500 direct employees, and 5,800 of them were furloughed. So we'd literally, with very little notice, closed our entire business down, which for a FTSE 100 company is an extraordinary logistical achievement in itself. And then shortly afterwards had to open it back up again. So given that as the lead in to this year, we hope to complete this year. So bearing in mind our financial year is July to June, so we've had a full year in it, but we hope to complete by June somewhere between 16 and 17,000 homes, which from a standing start without hiatus is pretty extraordinary. Construction's getting back to normal. So when we first started back on site, you know, there was a limited amount of trades that were allowed on site, certainly where we're doing internal work, so probably only, you know, a limited amount of people upstairs and downstairs in order to make sure we weren't spreading infection. We started opening new outlets. We've opened 57, I think, since the beginning of this calendar year. We've started repaying a dividend to our shareholders. We've repaid the furlough money back to government and our rate relief, and you know, sales are extraordinarily strong. So I think when you reflect back to where we were in March and April, it's just, I don't think anybody would have picked the situation we're in, and our focus now is on rebuilding our production with the same quality for which I hope we've become known. So focusing very much on quality, but delivering probably back to where we were before the pandemic in the next financial year, so over 18,000 units, and building back up to 20,000 units the following year. So even to be aspiring to that, given the circumstances, it really has been an extraordinary year, I think.
Absolutely, no doubt. Thank you for that. And Robert, what have you seen happening in the new build market in the last 12 months?
Well, I think part of the challenge we all had as we went into lockdown one was, how do we get everything open again? And the challenge, I think, was how do we work together as an industry? And Amy was part of discussions with the home builders, with RICS, with the conveyancers, with the removal people. How do we get safe working conditions back out there? We worked with MHCLG, actually, a lot of that, and us working together to get the safe working practices out there that allowed offices to reopen, sites to reopen, and find ways for people to either work virtually or to actually still have physical site representation, which was the key to getting things moving again in new build, so that customers could book and go and look at properties. Because whilst virtual works on one level, I don't think many people want to spend hundreds of thousands of pounds without seeing a little bit more physically what it is they're looking to buy, and that's been a really important component of getting everything working again. And what's been really important to me is people working together across the piece, whether it's lenders or builders or surveyors, to make sure that there's this partnership. I think whilst many nasty things have come out of what we've been through on an individual and collective level, I think the way that industry has come together and worked better together and with better understanding has helped an awful lot. So and I see the same thing now. So I see, looking at some of the numbers that we see on searches, particularly for mortgages, the volumes are now still flowing through today in terms of new build searches, flowing through the search engines, are at levels we've never seen before. So the level of interest from consumers is at an unprecedented level. We see that from the amount of searches going through the property search engines as well, where consumers are very, very engaged in the property market, which is going to be positive for all of us. So from a trade body perspective, all we've been trying to do is work together, make sure that there are brokers on the ground able to help and support in a way that's safe for everybody. And that's all we've ever been able to do, is just try and work in partnership to deliver results, despite the fact I may insult Adrian on various things every so often.
I'm used to that, Robert, but you make an interesting point. Actually, you forget some of the challenges, don't you? I'd completely forgotten about getting surveyors in to do valuations, because, you know, when we first opened up, you know, we still have an appointment only model for very good reasons, and actually just encouraging surveyors back onto site and reassuring them that they could do so safely. You forget some of the extraordinary challenges that we've actually overcome, and you're right to say collaboratively, you know, that's been a really important feature of it. So yeah, I'll forgive your insults for
that. No, excellent stuff, and yeah, absolutely very valid points. It has been quite the year. Craig, from a lender's perspective, what about you?
Well, I think what's been really interesting, it's been a really strong period for new build. I think there's a few factors which have played into that. So you've got the social factors. So a lot of people decided they don't want to live in cities permanently. Clearly, people, the expectation is we'll be moving to people working from home more regularly, permanently, in a kind of hybrid business model. So there's a lot of people wanting to move out of cities. There's lots of new build developments where you might get some outdoor space, and they're very much tailored to the way people want to live today. So I think that really helps new builds. So there's more of a kind of demand. From a lending side, particularly, of course, you need to remember that new build was the only place you could go if you did have a 5% deposit, because nobody was lending 95% loans on second-hand homes. That kind of pushes people towards new build. So I think it's been a really attractive proposition for several reasons. You've had the end of Help to Buy, or the end of Help to Buy before the changes come in. So there's been quite a few things which I think's meant a really golden period for a new build and made it a very attractive proposition for customers.
Absolutely, I've definitely been one of those people that has added to the statistics as well as I have moved within the last 12 months, mainly just being sick of looking at the same four walls. But we absolutely have seen quite a change in the mortgage market in recent times, and particularly because of the pandemic. But of course, we're also expecting to see further changes too, with the Help to Buy scheme being phased out. So what impacts do you think the phased changes, such as the regional price caps, will have on the market? And also what challenges or opportunities might come with the removal of the scheme by 2023? Let's come to you, Adrian, first.
So I think the transition between one scheme, the previous scheme, to the new one, I think we were a little bit nervous of coming up to it, because, as you said, there were price caps introduced and it's only available to first-time buyers. Actually, the impact of that has been significantly less than we may have feared, and largely due to the strength of the market. So you know, that's been a really good thing. Looking forward to next year, and we're selling, you know, 4, 5, 6 months ahead on a lot of sites. So really we're talking about September, October next year, which doesn't feel that far away, when we're going to be selling into a post Help to Buy market. And it'll be the first time that we haven't had shared equity of any description for any prolonged period of time since around about 2005. So I don't think we should underestimate the challenge. So the opportunities out of that are to find alternative ways of allowing our customers to buy our homes. So that's through high loan to value lending. It's through looking at other opportunities, whether it's bank of mum and dad, whether it's later life lending. You know, we think there's a sort of cohort of people I think we're calling extended middle age that are looking to start new lives post children. I think that's you, Rob. Extended middle age. I don't know. And probably having to work harder to you know, nurture customers that aren't necessarily in a position to move quite so easily, because there is no Help to Buy. So how do we work closely with our colleagues, going back to Rob's point again, of collaboration, in order to make sure we educate and inform people and put them in a position to buy a house. And I think that's the challenge for us together to address.
Excellent. And Kelly, as a shared ownership specialist, what's your view?
Unsurprisingly, I think there's a natural movement from the Help to Buy purchaser through to the shared ownership buyer anyway. Almost going back to what we were talking about a minute ago, I think we all expected house prices to go down for a period. There was that nervousness, and that just didn't happen, and the house price growth just continued and continued and continued. And I think it's important to remember that a Help to Buy buyer should never be a shared owner. They are two different people. But there is a natural progression from when house prices continue to grow, that your Help to Buy purchase naturally becomes a shared owner anyway. So I think there is a natural progression that would see people being served by shared ownership. There is certainly an appetite within shared ownership to develop more and supply more, and it's definitely something that's needed. And I just genuinely believe that shared ownership as a product is a solution a lot of the time for people. There are obviously other products coming about, and the 95% lending is there, but I think that's where affordability is always brought into question, because it's all very well offering 95% mortgages, but if you can't afford it in the first place, what's the point? So I think interesting times are ahead, and if house price growth continues as it has been, or even close to as it has been, shared ownership will just naturally be taking the place of Help to Buy in certain areas anyway.
Excellent, thank you. And Robert, what's your view?
I need to respond to Adrian first before I come to this. On my last car purchase, I called it a midlife crisis, and my son called it an end-of-life crisis, which was quite interesting in itself. But to come to this, I think the fascinating elements of this market are, having seen lenders come back to 90% and then 95%, it has created opportunity and a vibrancy where more and more consumers believe they can get onto the ladder, which is really useful. And it changes the PR aspect of what's in the press pages, which actually does drive most of consumer behaviour. I think the challenge sometimes with 95 has already been said is, at 95 it looks okay, but can you get over that affordability hurdle, which is a real issue with the way some of lender scorecards are currently structured, etc. And that's something I think we'll see some tweaking, because I think most people have come back to that market but didn't want to get avalanched. So I do see it progressing over time, where the product's not going to go away now. I think the other elements of this are very much around this Help to Buy transition. I think has been less painful than I thought it might be, because I think the good thing about all of this is that it was very well signposted. Homes England did a lot of good work up front. The builders got on side in the right way, and the brokers that work alongside builders are always working really well together with the sites in order to make sure they understand requirements and structures and what's possible. The other elements of this are where we go from this, which I think becomes more interesting, which is, will we get some form of builder-funded Help to Buy effectively, where there's some subsidy that comes into the product from the builders wanting to play in this space, because their recognition that they need that kind of support into the market might be something they want to play in order to continue to propel and protect house prices in the longer term. The big challenge facing everybody, I think, is what happens on first homes. So I think if the government is going to meet its first homes target, we do see this problem of builders having to put certain properties into sites before the end of next year, which are significantly discounted if the local authorities ever get their act together on it. I have my doubts as to how well the local authorities will be able to do that, and that's why I still think, as Kelly rightly says, shared ownership is probably still a better ticket to the game than perhaps first homes are, which are a version of shared ownership, but I'm not sure it's quite the version that everybody works with. The big challenge that I think faces all the advisors is, how do you cherry pick or make the right selections around all of this for the consumer? Because we're making the market ever and ever more complex for the advisor at the sharp end, between shared versus Help to Buy versus first homes versus actually just buy a smaller property. And that challenge from advice is hugely complex.
Absolutely, Robert. I think that's some excellent points made there. Craig, anything to add?
I think the key thing is a real need to innovate. I think the builders need to innovate. I mean, Adrian's talked there about new segments, so it's not your kind of first-time buyers or first movers, but different types of demographics that could be interesting. I think there's definitely a need for the lending industry to innovate to replace Help to Buy. I mean, we've got the new government mortgage indemnity guarantee scheme where the government's underwriting 95% loans. That feels like a missed opportunity because it feels like most lenders are not going to use that on new build. So that will actually more likely push customers into second-hand homes, because if you want a 5% loan, lenders aren't using that on new build, only on second-hand, and of course Help to Buy for a lot of people won't be available. So that feels like a missed opportunity. But I think we just need to innovate. We need to keep looking at different opportunities, how we can structure products. You know, we're at Kensington having a couple of conversations about some interesting things we can do to support the new build market. But you know, we all need to think differently.
Great.
Thank you. Well, that kind of touches on the next question a little bit, so perfect segue there, Craig. Thank you. So with one scheme ending, the Help to Buy scheme, the next one we've seen come more into focus is the new government 95% mortgage indemnity scheme. So what do you think the impact of this scheme might be on the new build market? Robert, let me come back to you first.
Yeah. It's like any government initiative. It's out there, it's available, and it's good that it's there. But I think for those lenders that committed to it, they probably wish they hadn't, because they hadn't seen the small print at the time. So I think the price looks hefty, and I think that's one of those challenges where having got the big boys to sign up, they're staring down the barrel of quite a hefty price premium that they'll have to factor into this, and therefore that's good on another level, because it means other lenders who've not had to commit to that but can get the right funding and right capital behind them means they're more competitive. And that's never a bad place for some of the people who are not in that core space to be. So positive, I think, because I think it gives an underpin to the market, which gives assurance that means other people can come in and play without thinking they're going to get avalanched. And that's the issue, I think, as we move up these little steps all the time, is the fear of being first to market and what it means, particularly if you're not one of the big 4 or 5 or 6, you've got the capacity to be able to cope with that. So I view it as all positive. It also indicates a really clear commitment from this government to the market. When they made the extension of stamp duty, that was a big step which many commentators said wouldn't happen, but it did. When they then came in with this initiative, which many people said wouldn't happen, it did. Nobody should be under any illusion that this government sees consumer confidence and house prices and confidence in the housing market as inextricably interlinked. Which one leads which, nobody knows, because with consumer confidence comes positivity about the housing market. With a positive housing market comes consumer confidence on the high street. The two are worked so closely in parallel that this government sees them as a really, really core part of their social policy, their economic policy. And therefore, I see this government, for as long as it survives, which is looking like longer and longer, being really, really entrenched into promoting a building and housing market as a core part of the economy.
Thank you. And Kelly, what's your view?
Very much the same. I think I would have worded it slightly differently, that the 95% was a fabulous headline. And I think from that point, brilliant, fantastic. You're absolutely right, Robert, that it then instills confidence. I think the actual impact of those 95% mortgages remains to be seen. I think as I said already, it always comes back to affordability. Within shared ownership, we've had 95% lending for many years from lots of different lenders, even right the way through the pandemic. We've had 95% lending. And that to us is invaluable. We couldn't sustain the numbers that we need to without that. So I don't believe that the same impact will be had in the open market. But as Robert said, you're absolutely right, that whether it's a direct impact of people taking those mortgages or if it's just a confidence issue, whatever that is, if it keeps the market buoyant and keeps the kind of money coming in and people buying and getting the homes they deserve, then it's a win, really. There's no downside to it, is there?
Oh, absolutely. And Adrian, anything to add there?
So from a purely new build perspective, it's been really interesting, hasn't it? So I don't know, my criteria knowledge possibly isn't entirely up to date, but I reckon there are probably over 15 lenders now doing 95%, and as far as I'm aware, only the Monmouthshire are doing it on new builds. So, you know, if that doesn't tell us what we need to know, I'm not quite sure what does. So I think there's two parts to that. One, we have to find our own commercial solution. We have to innovate, and I think it's people are generally aware that we've got two prospective solutions. One, an indemnity scheme, which is run collaboratively through 17 house builders at the moment through HBF, and market mortgage, which is a slightly separate sort of funding vehicle to facilitate 95% mortgages on new builds. So we think both are very credible. We're making a financial contribution to both, so we've got some skin in the game, and we're seen to be sharing risk. I guess we would still actually contest the principle that lies behind the lending decision that says new build is so significantly higher risk than second hand. We acknowledge that there is such a thing as a new build premium, but some of the publicity and data that surrounds it is clearly erroneous and ill-informed, so not very helpful. So an intelligent debate about what new build premium really is would be helpful, and some data to inform it, so we can actually properly assess the risk and then come to a more measured outcome, I think. But I think we've acknowledged for some time that we're always going to get to this point where we were going to need to participate in a industry solution to support 95% lending on new build, and I think we're pretty confident that we can deliver that certainly by the time we get to September, October next year, so that customers can access our market with a 5% deposit, and we think that's a really vital part of a vibrant housing market. It's difficult saving a deposit if you're a young first-time buyer in rented accommodation. It's hard work. Affordability, monthly repayments, I acknowledge, as we were talking earlier, is a slightly different issue, and this doesn't resolve that, but at least if we can solve this problem before September, October next year, I think hopefully we'll be in a good place.
Can I just add to that quickly? I mean, I think the other conundrum here is that most MPs now recognise this gap between affordability of people who are buying versus what they're paying in rent makes it actually buying a property is a lesser risk. The challenge is how we persuade those people trying to control the macroeconomic issues in Financial Policy Committee on stress testing and all the things that go with that. It's how do we get that change to get the policy changes that will make life easier for everybody. That's the challenge that unlocks here. The consumer perspective works well in terms of those people who've got a proven rent record.
Yeah, agreed.
Absolutely. And Craig, from a lender's perspective?
Well, I think I've pretty much answered it already. I think the mortgage indemnity guarantee seems to be a bit of a missed opportunity because lenders aren't using it with new build. But I think we need to look at other solutions to get us to the same place.
That's wonderful, thank you.
So is that a policy change coming, Craig? Is that a policy change coming?
Well, I can only speak for Kensington, and we are keen in exploring ways we can get to 95% on new build. The government scheme, for instance, you can't securitise, so it doesn't work for securitised lenders.
No, I agree.
So we're looking at alternatives because we're very keen to support in that way.
Absolutely, good question there. Well, thank you. So this past year, we've seen really the importance of technology in our industry and connecting us with colleagues and customers alike, as well as family. So what do we think the future of new build looks like in terms of digital technology? And have we started to see new build advice evolve into kind of more niche and specialist areas with them coming into market play? Adrian, let's come to you first with this question.
So from technology point of view, I'm going to confine myself to the mortgage part rather than modern methods of construction because I'm more comfortable on that ground, to be honest with you. So I'm not a real house builder, just in case you're in any doubt. I'm not sure how far technology has impacted the consumer experience. So I acknowledge there's lots of stuff that makes brokers' life an awful lot easier, access to information, and that applies to consumers as well. You still have to answer 70, 80 questions to complete a mortgage application form. You still have to come up with a whole load of pay slips and bank statements. And I'm not entirely sure that technology has improved the customer experience as much as we would like to imagine it has. And if you reflect that into conveyancing, then I think the same applies. I think there's very little difference. You know, land registry still, I think, want wet signatures on documents. I mean, really. So I mean, our ambition, I guess, is our customers engage with us in terms of financial qualification, face to face, over the phone and online, and we'd like to present to them a seamless and integrated opportunity to engage with our recommended partners in any of those channels at any point, because people don't choose at outset to be, I'm a phone customer or I'm a web customer. They dip in and out of these channels, and therefore it has to be integrated. I think that's a big challenge to the advice industry to provide that, just to allow customers to dip in and out in an integrated way. I think the other sort of part of the question, which is about changing advice, it goes to what we were discussing earlier in terms of nurturing customers, in terms of, you know, advice on specialist lenders and self-employed and shared ownership. You know, Kelly will be pleased that you know, I absolutely acknowledge the value of specialist shared ownership advice, and there is a risk, and I'm not suggesting that this is where they are, but there's an absolute risk that our brokers, panel brokers, become help to buy machines and become de-skilled over a period of time in actually more difficult advice processes. So, you know, I think our aspiration is to make sure that whoever we're recommending our customers to provide really great advice, whatever their requirements, and their requirements will become more diverse over the next 12 to 18 months, and that they can choose to access that advice in whatever format they choose to do so, pretty much at whatever time they choose to do so. So it becomes a matter of customer choice, which is certainly, I think, direction of travel that we'll be getting from our ombudsman experience as we come into that towards the end of the year.
Absolutely, thank you. Let me direct that question to you as well now, Robert.
Yeah, it's an interesting one for me. I mean, one of the projects we're doing a lot of work on at the moment is on identification and verification across the piece. So how do we get a single point of entry to identify the customer, verify them, that can then that little nugget of, let's call it a passport, can then be migrated all the way from builder to broker to lender to conveyancer to eventually all the way through to the surveyor if they want it as well. And that then part, how do we get also a property passport that gives us a view of what the property as it's built gets dropped into a system that gives provenance around who owns that property and all the utilities that wrap around it as well, so that when it then gets conveyanced later on, we don't have to go through the same processes again. So there's stuff being developed and talked about that really will change the journey over time. That's for 3 to 4 years down the line.
Yeah.
The issues today are very much around how do we use the information and data in a better way to get to better outcomes, and use the technology today, because, you know, the size of a property, the way it's constructed, all the measurements are very standard, and the builders have got all of those, and they should be able to migrate them out to the people who need them. Virtual tours of things should be part of the norm so that people can see stuff before they go in. And having the capacity then to source a mortgage and let the customer be part of the journey rather than be a separated part of the process should be something we aspire to. But the value is in the advice. The value is in talking to the advisor about all the things that are liable to go right or wrong, and the things you need to know to be mortgage ready. And we've been talking a lot recently about how do you get a property seller ready and how do you get a buyer ready, and have upfront conversations with a broker about being ready to actually make an offer on a property, because this is the really important stuff that that put you ahead of the competition who might also be looking for that house, because this is not going to be a world where it's that simple going forwards, in my view. So all this stuff can be technology driven. Some consumers want to be that technology driven, others still just want their handheld face to face. The challenge for all of us is, how do we build end-to-end structures? And there's also disruptors in the marketplace solving little bits of the jigsaw. I fundamentally believe that actually there are currently 3 big broker search engines, and, you know, whether it's Iris or 27Tech or Mortgage Brain, they're the 3 big ones that do most of the heavy lifting in this industry for the broker. And there's other things that have been added in by criteria tools now, and where they're beginning to pop other things on the ends around lending application, other things as well. These are the core tools that are still going to be around, I think, in 5 years' time. It's how do they buy, or what do we as the industry tell them have to be put into them in order for it to work for everybody. So the challenge, I think, is the big firms or the small firms who have got contracts with those people, they need to begin to dictate to them the terms of the organisation they want them to be, rather than having been for the last 25 years, those sourcing systems telling us what we're getting. And that's a big turnaround. I think it's something as an industry we have to accept the challenge on and begin to deliver. It's a big answer to a little question, Bob, so basically where I am on this.
An insightful one regardless, so thank you. And Kelly, what about you?
There's lots of answers that you could come out with here. I think that there's a few different angles. So for me, it's been really interesting to see how the public have embraced technology more. So we've always been quite a tech heavy business. We've been trying to use technology to, we always buys us time to talk to customers more. That's the only need for technology for me. Efficiency and better service. You're absolutely right, Adrian, that we need to ensure that customers get to choose the level of service that they want and how they interact with us. I'm interested to see how we now fare going forward. I think that going back to what we've always done isn't necessarily the right thing to do, because our customers have embraced technology more. Like you're saying, Robert, as well, the virtual tours of properties should just be standard. They shouldn't just be because we're in a lockdown. I think that that's what we want. That's what us as consumers we want to see. But also as consumers, we have got used to using Zoom. You know, my nearly 70-year-old mum FaceTimes me all the time. Very annoying, but it's what we're used to doing. So I think that we need to learn from the lessons that we've learned this year. Some of them we had to do quicker. Some decisions were quick and hard and fast, and we probably should have done them before. But I don't know if our consumers were ready to do those things then, but I feel they are now. So the future for me looks like a hybrid of the two. It looks like embracing the technology in those areas where it really was needed, and allowing customers to engage with us in those ways if they're more comfortable with that, but not shying away from that human touch, not shying away from being on site if that's the right thing to do. I'm not sure yet if that's the answer just yet. But if you then flip over to technology, where like you were talking about, Robert, about sourcing systems and the intelligence that they hold and the ability that they give a broker to be able to see a vast array of information accurately, I think there should be more pressure on those systems to make sure that they embrace all schemes. Again, I obviously come from a shared ownership perspective, but these systems are very rarely geared up to work for shared ownership. So when we're talking advice, when we're speaking to a customer about what their options, if we're being led by technology that isn't wholly informed itself, are we doing the right thing? So I think we have to be mindful that technology isn't always the entire answer. And your comment about specialism, I think it has its place and it is still needed, because I don't think everybody can advise on everything. And you are right that, you know, when you kind of immerse yourself in the shared ownership or the help to buy world, or even the help to buy to let world, whatever it might be, you do de-skill in other areas. So it's for firms like mine to make sure that we have that expertise in-house still, and we do what we know we're good at. We don't pretend. And again, technology is fabulous, but we don't rely on technology wholly. It has to come from experience and knowledge.
Excellent, thank you for that, Kelly. And Craig, anything to add on that one?
The only thing I'd say, I think there's been some really good adoption of consumer tools with some of the builders, whereby the consumer can go on and pre-qualify themselves, which I think is fantastic, because it's in nobody's interest, whether that's the customer, the builder, the broker, or the lender. To have an unqualified customer doesn't help anyone. So there's some really good tools out there on some of the builder websites where the customer can go on, fill in their details, and it will tell them whether they're likely to be accepted for a mortgage, and the broker then gets a qualified lead with potentially even a suggestion of the lender that would work for that. So I think that kind of thing's really helpful, because it helps the broker out, because it saves their time, and like I say, it's in nobody's interest to have an unqualified customer, least of all the customers. So I think more adoption of that would be really good.
Well, excellent, thank you. And as always with these types of events, we are quickly running out of time. Time has absolutely flown. But I do really want to fit this question in. So we've actually reached out to our LinkedIn followers last week and asked them what they thought the most valuable attribute for a lender to offer to new build brokers and customers. And overwhelmingly, the response we got from our intermediaries on LinkedIn was they answered flexible underwriting and criteria. It was absolutely the most valuable service over speed and over product. So firstly, just want to say a thank you to all of our brokers that took part in that LinkedIn poll. But secondly, we'd be really interested to hear what our panelists thought. So Kelly, coming to you first, what do you think is the most valuable service for a lender to offer new build brokers and customers? And also just to tag in there, maybe what the future of new build might look like too.
I think the lenders that we enjoy working with and are more successful with are those that offer consistency, even though that kind of flies in the face of what they've said on LinkedIn. I think consistency really, really is key, and knowing for that customer what we can and can't do. There's nothing worse than putting a case forward that looks like it should go ahead. I think we sometimes forget that what we deal with isn't properties, it's emotions, it's people, it's hearts and minds, and so every time a lender gets something wrong, is that okay to say, or moves goalpost, sorry Craig,
without letting you know before.
Yes, the impact of that is just not great. So for us to confidently be able to work with lenders, we want that consistency. We want to know that that case will be accepted, that the process is X, Y, and Z. It probably slightly, service is key. Service is really key, but it's honesty in service that I find key. If it's going to take you 10 days, just tell us it's going to take you 10 days, because I can work with that, because I can be honest with my customer and manage expectations all the way down the line. What we don't like is things that change all the time, and that service impacts on us. It makes us look bad, because whether we like it or not, we are the face of you to the customer, and so we need to ensure that we manage that. I think the future for new build is exciting. I think there's a lot of change coming about. I think there's lots to look forward to. There are things to be cautious of, but there always are. But you know, new build is in a stronger position as it's ever been, really, from a shared ownership point of view, for sure. And as long as the government schemes that they bring in future are fit for purpose, then I think it has a long, healthy life ahead of it.
Absolutely, thank you for that, Kelly, and I completely agree. I think transparency is so important in the industry. Robert, as the voice of brokers from the Amy perspective, what do you think mortgage brokers need in the new build market?
One of the things that's been trailed quite a lot in the trade press over the last few weeks is the issues of how we're actually dealing with self-employed and those who've had to take help during this crisis, and how we actually deal with the forward-looking of those people who've gone through some form of crisis in this, because there's large parts of the economy that have gone through a really difficult period but will now come back into being good parts of the economy quite quickly. And I think the lenders who are fleet of foot around that and appreciate that there are certain consumers that will be a very, very good risk, although their recent history might not look so good, will, I think, be big winners. And I think the big sausage machines will struggle with that. I mean, I think the big boys will struggle. And therefore, I think the nimble fleet of foot with quality underwriting and quality criteria will come out of this stronger, provided that they can get their funders in place to accept that it might not look quite the same as it did in the past. And I think that's the challenge often in this process, is how do you get this pre-approval effectively of this forward-looking view rather than this backward-looking view for certain people, particularly in the self-employed marketplace, as far as I'm concerned. But it's a huge part of the UK economy that we need to help and support as we come back out of this.
Excellent, thank you. And Adrian, let me direct that question to you as well.
So I think, you know, I'm probably not as close to the details as some of the other guys, but I think broadly, you know, an intelligent and proactive collaboration with our industry and the brokers that support it drives better process, product and criteria. So you know, that's what we've had from the Kensington, and you know, today is a testament to that. So thank you for today for inviting me, and thank you more broadly for your support. In terms of new build moving forward, well, I think part of the problem is that undersupply of homes underpins our market, which is not necessarily a good thing apart from commercially, but there's a intent to meet that challenge, to the undersupply challenge. We have the challenge of the Ombudsman coming up later this year. That's a good one because it will result in more consistent, better customer outcomes, and that has to be a good thing, so we're extremely supportive of that. And probably even more importantly, you know, the Future Home Standard consultation dictates that by 2025 every home we build should have a carbon footprint of 75% less than it is at the moment. You know, that's an enormous challenge for our industry, but it's an enormous opportunity as well. New properties will become more and more diverse, will diverge more and more from second-hand properties in terms of energy efficiency, which is an opportunity for our industry to prove the value that actually stays with the property long term rather than falls away, as is, you know, described in sometimes in new build premium. So I think engagement with lenders in that debate about sustainability, green mortgages that factor affordability, that factor energy efficiency into affordability, I just think is a really important issue which is going to affect all of us. And I think there's an obligation on all of us to meet the challenges that are ahead on this. So, exciting times ahead.
No doubt, absolutely. Thank you, Adrian. And Craig, I know you'll be covering some of maybe some answers to this in the new build vision that we've got at the end of today's session. But is there anything else you'd like to add right now?
Yeah, so I'll specifically pick up on Robert's points in that section later about self-employed and how we're going to react to that. But I think in terms of what lenders need to give brokers and customers is confidence. Kelly mentioned consistency, which I think is really important. A broker needs to have confidence that they're placing this customer with a lender that's going to say yes, and they understand why or why they won't say yes and what they need to do. That's very important, especially now people have got much more. Well, there's a lot of people who've got more complex circumstances than ever before. So I think that's really important. And then in terms of the future, I think the fundamentals are still really strong. There isn't enough houses. So if you look at the demographics, are very much, you know, people live in more single households than ever before. That's really powerful for new build. Robert's absolutely correct. So huge government support, whether that's shared ownership. You know, there's been big government support for the next 5 years for shared ownership, or continued support for the new build sector. There's lots of lender support, and I think fundamentally builders and developers are brilliantly positioned to react to the recent changes people have made in terms of how they want to live. That's very hard to do in terms of second-hand building stock, but builders can respond to that. So I think all those things coming together means that the future should look really good for new builds. Really exciting.
That's brilliant, thank you. And well, thank you everyone. So that brings us to the end of today's question. Hopefully that's provided some really good insight for the intermediaries who are watching today. And just want to say a really huge thank you to all of you for sharing your thoughts and for joining us this morning. So yes, thank you.
Great pleasure, thank you.